Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 13 and we've got a crypto instrument as per your request, which is Phantom or FTM. And of course, feel free to request the next instruments for episode 14 and 15 in the comment section below this video or any video. So let's get started. And it's quite interesting that today we have this particular instrument, because the last time we had a forex pair and we had like typical support and resistance where we have many failed attempts to break above or below a certain level or area, right? However, in this particular case, we don't have a typical support and resistance, because as you can see, we don't have enough data. We only have this swing here, and here we go, right? So in this particular case, if you watch like my previous videos for crypto and stocks, because this is where you usually see this type of charts, you know that in this particular case, we don't have support and resistance. That's why we go for the previous highs and lows. This is one. And of course, these highs and lows should be like major ones. And it happens that also sometimes it can be a demand area or a supply area where we had an explosive movement outward from it. So we go for previous highs and lows, supply and demand areas, and trend lines, which are non-horizontal support and resistance. And last but not least, we also go for round numbers. They are not as strong as a typical support and resistance, but they are still good and effective when we don't have support and resistance. And we'll see examples of these four in this example today. So let's do it on daily time frame. Of course, we start from daily and weekly time frames, so where we stand in the market, right? If you are overall bullish, bearish, or stuck inside a range. And of course, we'll be looking for buy setups around the support area. It can be horizontal or non-horizontal. And of course, sell setups around the resistance area, no matter if it's a horizontal resistance or non-horizontal resistance. In this particular case, we don't need to compare anything like the highs and lows to know that we are currently in a bullish trend, right? We had this impulse movement, correction, and impulse, a flat and small correction. It's more like a demand zone, right? So we've got two types of demand. We have this kind, which is a drop, base, and then rally. So it's considered a demand zone as we had an explosive movement outward from it. Or it can also be inside a big impulse movement, which is in this particular case, we had a rally, then we have a base, then we have a second rally. So this is also considered a demand zone. So the first type is called DBR, which is drop base rally. And the second one is called obviously RBR, which is rally base rally. Okay, it doesn't really matter like the name of it, but just for you to know. But when we see an explosive movement upward, this is where you know that we have a demand zone. When we have an explosive movement downward, we know that we have a supply zone. So in this particular case, we have two demand areas. This is the first one, as mentioned previously, and the second one is around this area. So this is first, we are done with supply and demand, and this is one. So just from supply and demand, we know that this is now a good area if price likely tests it to look for buy setups. So this is one. Second, we know that from a market structure perspective that we are overall bullish. We had this impulse correction, and we are currently in the impulse phase. So sooner or later, we will see or experience a correction, just like this one. In this case, we'll be looking for like trend following buy setups to catch the next impulse movement. But we can't really know where the correction would end. It can be like a very small correction, just like this one, or it can be a deeper correction like this one. That's why we don't predict. We can't really know where, so we don't buy blindly. We always wait for extra confirmation and trigger. Maybe on lower time frames here, we had like a head and shoulders pattern, a channel, any kind of a bullish reversal pattern. Anyway, we'll zoom in a bit to check it out. But let's stay on the weekly time frame for now. So supply and demand, we are done. Market structure, we are done. Now, and of course, this is our previous high. Now let's go to our round numbers. So first of all, we've got this rejection here, and it happens to be also a strong round number, which is 0.1 or 0.2. right? Because round numbers are very important, like to highlight the main ones, right? So for example, 0.1 in a chart that's trading like between 100 and 200 wouldn't make sense, wouldn't be relevant. So it depends on the chart itself. For example, in this particular case, always look left, right? And see where you are currently trading. Start from weekly and daily, zoom out and see where you are currently trading. And it's obvious that we are trading between 0 and 3. So the strongest ones are 0 or 0.1, obviously, so we can't like highlight the 0, which is around this area. So 0.1, and if you like noticed also 0.1 or 0.2 is also like was acting as a resistance previously, like here, and now price is like broke it upward and now retesting, and so it's acting as a support area. But anyway, it's also acting as a demand area, so it's a very strong area actually. Of course, if price like made it around this area, which I doubt to be anytime soon. For now, we are extremely bullish. Anyway, now we'll zoom into lower time frames like daily and weekly. We will like see when we might have a potential shift in momentum from bullish to bearish. But for now, we are very bullish, and we'll zoom in a bit. So round numbers are the strongest ones between 0 and 3 are obviously 0, 0.1, 1, 2, and 3. All right, the 3 like price didn't reach it yet. We have the 1, which is here, and as you can clearly see, it's like it happens to be like it happens that it's like respecting this area. So this was our previous high. Then price first of all was trading like this, then rejected it to the point, if you want to say, and then price broke it upward and also retested this 1, which is also our previous high, and traded higher, which is also what the 1 and this entire area is a demand zone, which we saw previously, right? So this is a demand area and a round number. This is a demand area and a round number. Of course, it's an area. It's not like a laser level, like to the point. As for example, here, like the price respected it to the point, or like around 0.95. While here, price like dived in a little bit before going upwards. So you can either like draw it at an actual area by like drawing 2 levels, or by drawing like an entire zone like this, or you can just like leave it as a level, but you know that you have to treat it as a zone. Anyway, for this example, let's keep it as like this. And for this one, for example, let's do 0.1, and yes, let's do 0.2 to cover this last low. So this is it, right? So this area is actually covering the entire like swing or low, and this area is actually covering the entire high, right? From the candle close to the wick. Anyway, you've got the idea. It doesn't it doesn't really matter how you exactly draw it, as long as you treat it as an entire area. Next, we have what? We have our 2, which is also a very strong round number. And price recently broke it upward. So as per our rules, it's now acting as a support area, right? And of course, let's do 1.9, since we have like 1, 0.9, 0.1, and 0.2. Let's do this. And you know what? I'll keep them all in blue. I usually like to do like blue, green, blue, right? But anyway, let's keep them all in blue for this particular example. So just from weekly time frame, we know that we are overall bullish. Let me take a sip. So we are overall bullish, and the price is currently sitting around a very strong support area as price broke upward. And we can see, as you can see here, we've got a wick. But if you zoom into daily time frame, we see that the price like broke up with a big candle. And actually, this price action, which you can see like a deep retest, is actually just this big candle, right? So this is what I mentioned previously, that on the retest of it, we'll be looking for bar setups. And if you zoom in now to those time frames, you will even see that we've got what? A head and shoulders pattern here, right? So if we zoom in, price was making lower highs, low lows, right? And then price failed to make a low low, instead made a higher low, and then broke above the previous high, which was like, because we have a pattern, the head and shoulders pattern. So here, like here, the reversal was confirmed, and as you can see, the price kept moving higher, and it's currently like making the same retest, but now like it's a smaller retest. So let's see if the price like would break it downwards, right, for a deeper retest and then trade higher. Anyway, we'll know exactly what is our trading plan and what we are waiting for, or the retest would be very, very small and we would have a break upward. We can't really know. Trading is not predictive, trading is reactive. So let's like follow our rules and wait for the buyers to take over, because obviously now the sellers are in full control. Okay. So this is basically it. And of course, we can draw our round number 3. Let's do it. So it would be now our next rejection area and 2.9. So let's do it real quick. And let's keep it anyway in blue as well. So now when price like trades higher, we can expect, just like previously, right? We couldn't like know, right? We couldn't know it before. So it was a very strong round number. So price rejected this round number and then broke it upward. So now we can expect the same thing, and obviously here as well, the 1. So FTM seems to be respecting these round numbers. So when price like trades higher, we can expect to see a rejection from it. Of course, we'll need extra confirmation and we can see it or like identify it from lower time frames. So that's basically it from daily time frame. And I forgot to read these ones. I'm sorry. Okay. So, and then you can actually draw a channel here, right? Which is this one, and it would be like more visible on H4 time frame. Anyway, I'll make it appear on all time frames. And 1, this is it. I don't want to see it on week, right? Because it's like, as you can see, it's like very, very steep. While on daily time frame, it's like respecting the price very well. And as usual, we try to make an offset for it, and this is it. So we are overall bullish, trading inside this brown channel, and price broke above the 2, which, as we know previously, once broken upward, it can act as a support area. But this time, unlike here, price like broke it upward with many, many candles and then retested after a while. While here, we just had a break upward and the price is like retesting it like immediately. Okay, but anyway, it doesn't really matter as long as we wait for the buyers to take over before we enter. So how to do it, how to wait for the buyers to take over, we'll zoom into the H4 time frame, but from daily and weekly time frame, we identified our key rejection areas, which are this one and this trend line. So price can still trade a little bit lower because it's an entire zone. So it can be like drawn like this, right? So we can't really know how we draw it. That's why you treat it as an entire zone. And of course, unless price breaks it downward with a big like price action, just like here, for example, then we know that it's now broke, or like this, right? Because here, no matter how you drew it, like here, it would still be broken. Okay, so wait like an aggressive break above it to confirm that it's now broken. So from daily time frame, we know that we are currently overall bearish in a correction phase. We are looking for buy setups to catch the next impulse, and we know that the sellers for now are in full control and can still trade lower till around this area, which is like 1.8 before trading higher, which is also this high here, right? And as mentioned for weekly time frame, for the sellers to take over, they will need to break the structure, because now, right, as the buyers are in control, we had an impulse correction. So we're expecting next impulse. If correction was too deep, right, so it like would result with like an almost equal low, which is not the case in an uptrend. When we have an uptrend, we can expect a higher high and a higher low. When you see like a deep correction like this, you know that the buyers are still in control, but the sellers are taking over. So in this particular case, for the sellers to take over, they will need to break below this blue zone and also below this brown trend line. Then and only then we can say that the sellers took over. And on this retest, in this case, we can look for sell setups as a movement till our next support, which is like 1.1, 1.2, doesn't really matter. It's an entire zone, would be expected. Okay, so long story short, for now, we're looking for buy setups, knowing that it can still trade lower before going higher. That's why we don't buy blindly just on the retest of the 2. We always look for extra confirmation. If you zoom into H4, this is the head and shoulders I was talking about. from daily time frame, right? So head, left shoulder, and right shoulder, and here's our neckline, price broke upward and traded higher. For now, it's retesting this area. So what we can do is we will like draw trend lines which engulfs this correction movement, and we want the buyers to take over, and then we'll be buying on spike upward. So we can draw it as a channel, or we can make it like a little bit like flatter to be a wedge. This trend line doesn't really matter. If you want, you can also delete it. But if you want like to engulf the overall movement, you can draw it as a channel, and as you can see, it looks much better, and you can expect like when the price is over sold in this case. And just like daily time frame, for example, if we didn't have this trend line, we couldn't like know that the price is currently overbought, right? So this is why. So we can draw this trend line starting from here. When we had like this high, we can draw it 1, 2, and then make an offset for it, so we can know when the price is overbought. So you don't need like RSI or any other indicator to like identify if it's overbought or oversold. You can just do it using price action. So this is basically it, and we are currently in a correction phase. Now the possible scenarios are, as mentioned previously, we're waiting for the price to form a new swing, maybe around the upper right trend line. We can't really know. That's why I said maybe, because price can form it here, here, or here. Doesn't really matter, right? When we have a swing around the trend line, it will be confirmed to be valid, and then we'll be buying on spike upward. That's when the buyers would prove that they are currently taking over. So lower high, and lower lows, as you can obviously see. And so the sellers would be in control as long as or until the buyers take over, just like this. And of course, it can also trade lower and lower, as mentioned previously, before picking upward. In this case, this would be our last swing high, and we're waiting for it to be broken up. And actually, in this case, if price like trades a little bit more lower before reversing, we would also like have a better entry. So we wouldn't like enter around 2.15, we'll enter around like 1.9, right? So anyway, it doesn't really matter, as mentioned previously, as long as you are waiting for the buyers to take over. We'll be waiting for it, as mentioned, if here or here. Meanwhile, until the buy is activated, we would be overall bearish, and of course, from a long-term perspective, would be overall bullish, and this is actually just a correction. But from a short-term perspective, we are now bearish, and we'll be waiting for the buyers to be also, from a short-term perspective, bullish. So the short-term perspective and the long-term perspective would be aligned. That's when we want to get in, right? So that's it for Phantom. I guess it's a short video, but it's a very straightforward one, as we don't have enough data, but you actually know how to trade it. And of course, for the sellers to take over, they have to break below this brown trend line, right? So we have an aggressive movement like this, or it can be like this, and then we'll be looking for rejection on the retest. And in this case, we'll be looking for new buy setups to form as price approaches this area. That's it for Phantom, and I'll see you on the next one.